Today, I'm delighted to be joined by Craig Martin, Chairman of Dynam Capital and Fund Manager of Vietnam Holdings PLC. We'll be discussing what's been a pivotal 2025 of Vietnam Holdings and the reclassification of Vietnam into emerging market status in 2026. Craig, welcome.
Great to be here. Thank you very much.
Before we dive into this, what's been an exciting year for Vietnam in 2025 and looking ahead to 2026, can you give those who may not be familiar with Vietnam Holdings a quick overview of who you are and what you guys do?
So I'm Craig Martin. I'm the chairman of Dynam Capital with a manager to Vietnam Holding, as you mentioned. Vietnam Holding is a very simple beast. It's listed on the main board of the London Stock Exchange, and its sole purpose is to invest in the exciting stock market of Vietnam. So all Vietnam Holding has is underlying stocks listed in Vietnam. We're 20 years young this year. We'll be celebrating our 20th in June in London later in the year. So we're a closed-end fund listed on the London Stock Exchange. We trade at the narrowest discount to NAV of many of the UK investment trusts, around about 5-6% normally. And as I mentioned, the sole purpose is to give investors, UK investors and European investors, an opportunity to diversify their portfolio and invest in what we see as one of the most exciting emerging markets in the world.
That's great. So what factors had the biggest effect, both positive and negative, in 2025? And did your investment model change because of any of these factors?
Well, as you mentioned, 2025 was an amazing year. A lot happened. Obviously, in April last year, we had the president of the US announce wide-ranging reciprocal tariffs globally, and that got many markets worried. It got Vietnam worried as well, to be honest. But Vietnam was really quick to react and negotiate with Trump, President Trump. They saw that there's a transaction to be done and to try and get a more balanced level of tariffs, which they succeeded in doing. As a country, they also started to do two very important things. One, tilt towards the domestic economy and booster up the domestic linkages and the strengths in the economy. And secondly, position the private sector as the key catalyst for the country's mid to long-term economic growth. Now, why that is important is that actually Vietnam is still a communist country. Last year, it celebrated its 80th year of independence and 50th year of reunification between the North and the South following the wars and the disputes of half a century ago. But it's still kind of centrally organized with a Politburo and a General Secretary of the Communist Party. So to say that the private sector is the key engine of growth is quite an amazing thing. So I think what happened last year, in 2025, the domestic investors in Vietnam, and there are 12 million of them, actively trading on what they see as their home country's growth, got very excited. And the government's saying the private sector is key. So domestic investors found one private sector company and went all in. And that company did really, really well. It's a company called Vincom. It's a group of companies. That stock rallied more than 700% last year. Mm-hmm. And it's a key part of the index in Vietnam. The index weight for that company is more than 10%. So the index last year was up more than 30%. So Vietnam as a whole did really, really well. Our fund, we were up maybe less than 10%, close to 10%. So last year, for first time in many years, we underperformed. But that's just comparing to an index which was weighted by one stock, which went up 700%, and we don't hold that stock. So we have a concentrated portfolio. So our investment thesis and model hasn't changed. The last, let's say, 20 years young in this June, our focus is finding good companies with kind of easy to understand business models, where we can look through their earnings and see quality of earnings, compound earnings, business leaders driving those businesses with whom we can have engaged conversations around good governance, reporting to investors, focus on sustainable business practices. And that's how we build our portfolio. So at any one time, we've got maybe 25 companies. We're not the index, nor do we want to be. We can't invest in everything in Vietnam, so we're quite selective. Our top 10 companies in our portfolio account for about 64% of the portfolio. Our number one company is about 10%. So we look for ways to play the exciting growth of Vietnam. It is the fastest growing market in Asia. Last year, 8% GDP growth. This year, at least that. Government's targeting 10. So we're trying to find those domestic champions. So if you compare us to the index, we underperformed. But if you look over our 15-year track record, we've always outperformed. And we hope that, I think it's called mean reversion. This year, our practices and our discipline, sticking to what we do well, will bear fruit.
That's kind of segues me nicely into a sort of question I was pondering, in that, you know, we've seen one company there outperform disproportionately and
Yes.
then sort of drag what you call a very narrow index really, you know,
Yes.
along. What makes you then, you know, as a fund manager sitting there, you must be thinking, right, do I stick with my valuation model or do I chase the momentum? And how did you get around that? Because that must have been quite a pull for you.
Well, myself and our team, we're all humans after all, and we look at that and go, no, what are we doing wrong?
Yeah.
But we remind ourselves, we're disciplined investors. We've got names in the portfolio that we've known for many years. Some have been fantastic companies for us for over a decade, you know, generating 20% plus of compound earnings each year. So we stick to our knitting. I think one thing we did learn, which is don't be afraid to take profit and then recycle that back later into names or into new names as well. So we've got these kind of key champions, category champions in our portfolio, and then we're trying to find what we call rising stars, these kind of companies that will grow similarly at that kind of rate of growth, and then will be the category champions of the next 10, 20 years. So we've held fast to our discipline. We're very, you know, we review the portfolio every week. We kind of, you know, what are we missing? What are we not seeing? What's the market not seeing? And I think there's a slight disconnect in that the market is very much driven by these retail investors. You know, the daily liquidity of the stock market, on average, is about $1 billion a day. It reached close to $2 billion towards the end of last year. That's the most liquid stock market in Southeast Asia.
Right.
But those retail investors, it's great to have them in the market. It's a great sign that Vietnam's open for business and equity investing. But their mindset's probably a little bit different to us. We're a longer term institutional investor. So we've got to constantly look through the noise, look for fundamental value, and not be afraid to take profit when perhaps the stock's gone past our target level. So we're not the index. As you say, it's fairly narrow. And in the index, it's an emerging market. So more than 40% of the index are in banks. Now, we like banks in Vietnam. Our portfolio's probably got about 30%. So we're underweight the index, or maybe 35%. And we're just looking for great ways to play the opportunity set. So hold fast to disciplines, don't get carried away, stick to your knitting is really what we're trying to do.
Well, again, that leads me very nicely into my next question, which I wanted to talk to you about, was bank overweights, risk versus reward.
Yes.
Wow, I suppose you've got substantial bank exposure.
Yes.
You know, what are the key KPIs you're looking for? And is there anything that would suddenly make you think, okay, we need to de-risk from bank exposure here?
Well, it's super interesting. So maybe 5 years ago, we had less than 10% exposure to banks in our portfolio. And we've got a wonderful lady who's one of our senior analysts, and she wrote a 100-page report on the banking sector for an audience of 4 people. So we went through this, we put a lot of work into it. And it gave us a lot of conviction on more names in the banking sector. So we allocated to maybe 4 or 5 banks, and they've done phenomenally well. And in fact, last year they contributed to our growth in our net asset value. Some of the banks were up significantly. So what we're looking for in banks are a way to play the broader economy. Not everything in that great economic story in Vietnam is in the stock market today. Even though there are 1,600 companies listed, there's many segments of the economy that aren't in the listed market. But banks play to all of that. You know, they finance the international trade, they finance the project finance, they finance the consumer growth through mortgages and consumer lending, and all of these things. So banks are a great way to play that. The banks in Vietnam are moderately priced. You know, somewhere between, they've risen in value a lot last year, so the valuations have come up. but still between 1.5 and 1.7 times price to book, reasonable levels of PE, good net interest margin spread. So fundamentally, they're able to do well to leverage their footprint and earn money for shareholders like ourselves. But these banks are also taking advantage of technology. So one of our banks is a technology champion. It's like a fintech champion that's profitable. So it's got more than 25 million online bank accounts. It's reaching people with innovative products. So we see great growth ahead in banks. And so we're going to stick with a high percentage to banks. I say we're currently between 30 to 35%, even though the index is even higher than that, maybe 40, 45%. So we're looking for well-managed banks, reasonable levels of valuation, good positions to capture the credit growth in the market, and kind of balanced portfolios and reasonable levels of non-performing loans. So I think the banks that we've got are champions and well positioned in that space. What could drive them even more would be a resurgence in the real estate market. We saw some early signs of that last year, that's coming back after maybe 2 or 3 years of the real estate sector being in the doldrums because of difficulties, not because of issues around lack of demand, but more supply issues and financing the projects and the red tape and the bureaucracy needed to build these projects. So they should start to get unlocked in the next 18 months, and that's probably good for the banks as well. So we're happy with the banks as a sector, but again, it's not just one bank. We've got maybe five or six good banks, and we're just trying to pick the best out of the. There are more than 40 or 50 banks in Vietnam. You could argue there are too many banks in the country. Yeah. But then again, actually, Vietnam historically has been underbanked. It's only in the last 3 years that the number of Vietnamese holding bank accounts has gone above the number of Vietnamese with a Facebook account. So now you've got more than 70-80% of the population with bank accounts. So there's still a lot of growth. There's still a lot of runway.
That's a very interesting stat. I suppose one of the elephants in the room, I suppose we need to speak about as well, is the sort of FTSE Russell upgrade from or to secondary emerging market status. I mean, hugely exciting. For especially for you guys. I mean, what specifically needs to happen then? Because I believe it's is it March or May the review is, and it happens in September. So what needs to happen, and are you going to reposition your portfolio, or are you sitting pretty?
Well, look, it's been a long time coming. So I think FTSE Russell kind of put Vietnam on the watch list for secondary emerging back in September 2018. Oh, wow. Okay. So we've all been waiting a long time, and then they announced that it's going to move to emerging market in September 2026, subject to a review in March, which is common. I understand that's how they look at all of their markets. They give the initial announcement, they review it 6 months later, then 6 months after that, if all's in order, it's included, giving market participants the time to prepare and get ready. So I think it's very important. I think its strength is not so much in unlocking billions and billions of dollars of new capital flowing in, although that is going to happen. I think it's more of a statement that Vietnam is ready for more institutional international finance, that the government is willing to take steps to implement changes, regulatory reforms, modernizing both the software and the hardware of the stock exchange system in order to meet the requirements of the stakeholders behind people like FTSE Russell. So they met a whole range of questions over the last 7 years, knocked each one of them tick, 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 and got the approval. So in March, it's more around, do foreign institutional brokers have freer access to the market? And can people transact with their known, trusted foreign brokers that they know, as well as the local champions? And so I think that's just a process. So our understanding is that underway, and that September 26 should see full admission. Now, FTSE Russell is probably the smaller of the two index makers. MSCI is a larger one, and Vietnam is still on the frontier market for MSCI. Now, that's going to take longer. That's probably another 2 or 3 years to satisfy their requirements for their stakeholders. But I think it's a vote of confidence in the Vietnamese government. It's a vote of confidence in the Ministry of Finance and the apparatus that welcomes foreign investors. In addition to that, last year, the Vietnamese government set its stage out to say, not only do we value the private sector, but we see that international finance is really important. And we're going to create an international financial center in Vietnam. In fact, two. One in Ho Chi Minh City and one in Da Nang, halfway up the country. And that's going to enable different ways for foreign institutional capital to work in and through Vietnam. So I think that's super exciting. Details yet to emerge about what that means, but includes things such as trying out new forms of digital technology for digital assets, cryptocurrencies and those kind of things, as well as perhaps more exchange products for international investors. So I think Vietnam's really opening itself up to the international financial community, and I think that bodes very well.
One of the things I find fascinating about Vietnam Holdings is your sort of the way you treat discount control and redemption. So could you talk us through what's your decision framework around, at what point you sort of do a buyback or do you leave it go to redemption?
Yeah, well, thankfully, as the fund manager, we're not alone. We have the board of Vietnam Holding, which is very independent to us, which is a good measure, and of course the investors in the fund. And so everything we do is with the approval of the investors, the shareholders in the fund. And for a number of years, our key tools had been occasional tender offers to address discounts to NAV, and a regular share buyback program, buying back the shares and cancelling them, or now keeping some of those in treasury. Better communication and marketing about the opportunities in Vietnam, daily reporting of NAVs, so that people can understand what they're buying. But to be honest, the discount only really started to narrow a couple of years ago when we announced a formalized annual redemption. So we had the second of those in September 2025, the first year previously. The first year we had about 12-13% redemptions. Last year we had about 17 or 18% redemptions. So that gives investors the opportunity to exit at NAV, regardless of what the discount is. Now, the fact that that facility is in place, I think, gives confidence to investors that they can trust Vietnam Holding, that if they want to get out, they can, either through the stock market on a secondary basis, trading their shares, or this annual redemption. So that's why the fund Vietnam Holding trades at the narrowest discount of any of the three Vietnam-focused investment trusts that are listed in London, and narrow rather than many other investment trusts. So it's an important tool. That's not to say there are no buybacks. The board still does buybacks when they see the discount widening because of perhaps supply and demand imbalances going through the market. So both are important tools. I think the redemption facility is the most important of those tools. So it's very innovative. We were the first fund to do it. I think it's likely we'll see other funds follow this and follow suit, follow our innovation around that. And in fact, one other fund is already doing that. So the board want to see the discount narrowed. We as the manager are very happy to shrink to grow. So obviously through a share buyback or through a redemption, it's actually a reduction in the fund size. We've got to sell underlying assets to fund that. But our aim has been to narrow that discount and in fact to eliminate the discount. We had some success last year.
Do you think that's possible?
People have thought it's not possible, but last year that we eliminated the discount. This time last year we were trading at a premium to net asset value. For the first time for many, many years, and we were able to issue some shares.
Not many funds can say that.
Not many funds can say that. So up until April it was great, and then obviously the world changed when the reciprocal tariffs and the trade tantrum started. So it's not impossible. So as the market continues to power ahead in Vietnam, and as people see this high growth rate and see the Vietnamese government deliver on these objectives, maybe they get a little bit more confident around that. Now, we're also in a globally connected world, so investment decisions are also affected by what's happening elsewhere. But we think it is possible, and we'd like to see that discount disappear, and we'd like to be able to issue more shares and grow the size of the fund.
That's great. So I suppose, what could go wrong in 2026? And what are you most excited about? Well, we can round off on that.
So 2026, actually, in the Lunar New Year, so in Vietnam, as in other parts of Asia, it's the year of the horse. And so obviously in a horse race, you hope your horse is going to win and not stumble. Many years since I've lived in the UK, but I remember as a kid there was a great horse called Red Rum. And I think if Red Rum was running in a race, you would back Red Rum.
Yeah.
And you would win.
Bookies hated him.
Bookies hated him. And I think Vietnam is Red Rum. It's galloping ahead, high levels of GDP growth, got everything right. So we're backing Red Rum in that analogy. I think the risks, though, and we have to obviously focus on risks, are probably more external. I think Vietnam is well placed because it's got a strong domestic economy as well as an international economy. In some emerging markets, Argentina, for example, is much more export oriented and is more at risk perhaps around its currency and inflation, what's going on in the rest of the world. Vietnam as an emerging market actually has a very strong domestic economy. It's also got a very advanced industrial linkage into the global economy, which is a positive normally, but in a world where there are trade dislocations and geopolitical tensions, of course that can be impacted. So I think we need to watch the externalities. We need to watch what's happening globally. Continue to keep an eye on the tariffs. Vietnam has grown its exports last year, despite the tariffs, by more than 20%. Exports to the US have continued to grow despite the tariffs. Vietnam, as I mentioned, has been kind of negotiating with the US, trying to buy more US stuff, agricultural goods, energy goods. So it's got to continue to do the same. It's got very ambitious targets for growth. It may not hit all of those, but you've got to have ambition to succeed. So our eyes are on the domestic market, finding those great companies, those domestic champions, but we have to be aware of what's happening in the region. And we are in that, I would say, uncertain times globally. And so we need to be alert to those opportunities that present themselves.
Well, Craig, thank you so much for your time today. It's really fascinating, as always, speaking to you.
My pleasure. Thank you much.
Good luck for 2026.
Cheers.